Hello, everyone, and welcome to IFAI's Textile Industry Plan webinar, brought to you by Jason Ludwikowski of Transamerica Retirement Solutions. My name is Haley Bartley, and I am the Member Program Specialist here at IFAI, and I will be moderating today's session. This webinar is being held to inform members of IFAI of the 401k plan that we are offering through Transamerica as a member benefit. You will have the opportunity to submit text questions to Jason by typing in your questions into the question box of the control panel on the right. You may send in your questions at any time during today's presentation. We will collect these questions and address them during the Q&A session at the end of today's presentation. With this, I would now like to introduce today's speaker, Jason Ludwikowski.
Thank you, Haley. Good afternoon, everybody. Thank you for your time today. I hope you're all having a great start to, I guess, what you would call the summer holiday season. But over the course of the next 30 minutes or so, I'm going to review a great benefit that IFAI is sponsoring to all of its membership. It's a retirement plan benefit. So with that being said, over the course of the next 30 minutes, what we're going to do is look at a couple different things. For the agenda, we're going to look at single employer retirement plans versus multi-employer retirement plans. We're going to look at the administrative support provided through the Textile Industry Retirement Plan, its fiduciary risk management, investments, employee education, the fees, and then, as Haley had alluded to, we'll have time for Q&A at the end. And feel free to type in any questions that you have throughout the conversation, throughout the presentation that we can address for you. So let's go ahead and look at a single employer plan. So what IFAA is sponsoring is what's called a multiple employer plan, where they're sponsoring it as a member benefit. For some of you on the line who may potentially have an existing retirement plan in place, or for those of you that don't have a plan, if you were to go and establish a plan on your own, you would have what's called a single employer 401k plan. By offering a single employer plan, you're going to bear the fiduciary liability associated with it. You're going to have some explicit trustee duties. There's going to be some administrative costs that you will bear. For those employers that have more than 100 participants or eligible employees, you would have what's called a plan audit. Some of these audits range anywhere. The least costly audit I've seen is $4,000. I've seen some audits in the $20,000 range, and this would be a direct expense to the organization. You'd have to determine your plan design, and then also make sure that you're providing proper education and enrollment support to your employees to assist them with their retirement decisions. What IFAI is sponsoring is called a multiple employer plan. And by being a member of IFAI, you are permitted to join the retirement plan. Under a multiple employer plan, there are some distinct benefits. The first being asset pooling. So when we look at the pricing structure, it's been priced looking at the asset, I guess you could say the aggregate assets or aggregate opportunity within IFAI itself. You're going to experience some reduced administrative costs. Some of the fiduciary responsibility will be offloaded onto IFAI. You'll have trustee duty relief. For those organizations that have more than 100 participants, you will not have any explicit audit cost because IFAI will file one audit for the entire 401k. You'll still have access to designing a plan that's going to best suit your organizational needs. What do I mean by that? You're going to be able to select your age requirement, your service requirement, your matching, your vesting, all those elements of your 401k that are going to govern your plan itself. And then, of course, from an employer and an employee standpoint, you're going to have access to websites where you can monitor your appropriate components of the plan. From a participant standpoint, you'll still have access to monitoring your investment selection, making any changes to your investments, your deferral percentages, and so forth from that component. So let's look at the first main benefit being the administrative offload. It's been determined that on average, if you were to construct a 401k on your own, an individual spends approximately 5 to 10 hours a month administering that plan internally for that organization. What could that individual be doing with, let's say, a couple additional hours each month if they didn't have to spend that additional time administering the 401k itself? What do I call by offloading some of the administration? You don't have to worry about approving loans and distributions that your employees may request. That will be done on behalf of you. You don't have to worry about filing a 5500. For those of you who don't have a single employer plan currently, all 401ks must file what's called a 5500, a reporting document on their plan with the Department of Labor on an annual basis. Under the multiple employer plan, IFAI will file one 5500 for the entire plan on an annual basis. If you were to have a single employer plan, this responsibility would fall upon you. Another key component is that the third-party administrator and the 316 fiduciary oversight will ensure and work to ensure that the plan stays in compliance and updates accordingly as changes are made within the 401k space itself. You don't have to worry about doing any investment reviews and looking at a list of investments and determining how you want to narrow that list down to offer to your employees. Those investment reviews are done by the investment advisor and IFAI as a whole. The second benefit is the fiduciary risk mitigation. As I alluded to earlier, if you were to establish a single employer plan, the fiduciary risk would fall upon you. To ensure that the plan is being managed appropriately, you'd have to go through and do the investment reviews and make any investment changes in the lineup that you offer to your employees. Potentially within the plan, you're going to have to approve any loans and distributions. Under the IFAI plan, a lot of that is taken off of your plate and borne by the various partners within the plan itself. For example, loans and distributions are going to be approved on behalf of you, as I mentioned earlier. The 5500, you don't have to worry about filing. You as an organization are going to have to ensure that the census information that you're providing regarding your employees is sent in an accurate and in a timely fashion. You're going to have to also ensure that if you're making any employer contributions to the plan, that you have the funds and the resources available to make those employer contributions, such as a match or a profit sharing plan component itself. Now let's go ahead and look at the investment flexibility. One of the key components of the IFA plan itself is you as an organization don't have to worry about reviewing the investments, navigating it, monitoring it on a regular basis. The investment advisor within the IFA plan itself and the IFA team has gone through and they have done the due diligence on the investments and have come up with a very robust investment lineup comprised of actively managed and passively managed investments. So that's something that you do not have to worry about. And then they monitor that and will make any changes on an ongoing basis as needed. We all know that employees have good intentions at the end of the day, but sometimes, things get in the way and you forget to go back in and monitor investments and make changes as needed. So what happens if employees never changed? Here's a unique statistic in the sense that 5.1% of participants in retirement plans changed the allocation of their account balance. So they went in and they looked at their investments and made allocation changes appropriately. 3.5% changed future allocation contributions. So they went in and looked at the future contributions and changed their allocations appropriately. We all understand that as people progress throughout their career, times change, but the risk tolerances do as well. One of the key components of the IFA plan is we have what's called the BlackRock Target Date Series. For those of you who have a current 401k in place, you're probably familiar with the Target Date Series. For those of you who are not, a Target Date Series is built upon an employee's retirement date. And typically it's in a 5-year incremental period. And what it does is it's based upon the employee's retirement. So for those employees, let's say that, for example, are 40 years out for retirement, they have more of an equity exposure than a fixed income exposure in that target date solution. And then it rebalances quarterly. And then as that employee progresses through their career and as they get closer to a retirement type stage, eventually they're going to have more fixed income exposure in that target date solution than equity exposure from that standpoint. So what happens is it's an investment that's basically what you could call a set it and forget it. It rebalances quarterly as the employees progress through their career and get closer to that retirement stage. Now, we all know that retirement plans are not successful without employee engagement. Here at Transamerica, we utilize a three-step approach. Now, one thing to keep in mind is that we do offer education enrollment support. So what do I mean by that? Transamerica has education enrollment specialists scattered around the country that can come in and conduct a live in-person education enrollment meeting for your employees, or we can also do a live pre-recorded webinar or a live webinar or a pre-recorded webinar that your employees can utilize to learn about the benefits of the 401k and how to enroll into the plan. And our team uses a three-step process. One is joining the plan, getting that employee to realize the value of joining the plan regardless of how much they can contribute to the plan, such as something today is better than nothing tomorrow from a retirement type standpoint. Saving more, we share with them how increasing their deferral percentage over the course of time could impact their retirement outcome. And then diversifying your investments, speaking to the diversification of their investment menu from that aspect of it, not putting all their eggs in one basket. We do also have bilingual capabilities for those of you that would potentially need a bilingual enroller. We do have that availability to you. As I mentioned earlier, we can do live webinars or pre-recorded webinars as well. One of the other neat aspects of our education enrollment support that I forgot to mention is that we do have an interactive tool called OnTrack. And what OnTrack does is it basically allows the employee to input their retirement goals. It takes into consideration their 401k account at that point in time and allows them to input any outside retirement type assets that they have, whether it be other 401ks that they have at prior employers, other just in general retirement assets of a spouse, into this application, which then allows them to see, are they on a roadmap to meeting their retirement goals? And it's based upon a weather forecast. So it's rainy, partly cloudy, partly sunny, and then sunny. And then hopefully the goal is that by the employee inputting all this information, they're able to see where they stand within that roadmap to their retirement goal. And then it allows them to also input different type of deferral percentages so they see how that can impact their retirement goals. And then they can sort of look at their progress and how they're moving forward through their careers to meet that retirement objective. Now, the last benefit of the multiple employer plan would be the pricing itself. So when we looked at pricing the plan, we looked at the overall potential of the IFAI membership from a pricing perspective and took that into consideration. There would be some additional fees on the plan that we can get over to you after the call from an employer and employee type perspective. But some of the benefits of the multiple employer plan from a pricing perspective are you don't have to file that 5,500. You don't have to file an individual audit at an organizational level. But also from a different standpoint, you're going to be able to construct a plan that's going to best suit your organizational needs without having to worry about any additional costs coming into play based upon how you would like to structure your plan from a matching standpoint. Now there would be the cost to the organization, but from an organizational cost standpoint to implement it. With that being said, I do appreciate your time today. I know I covered a lot of information here, but this is a great benefit being offered by IFAI. For those of you who currently do have a 401k in place, hopefully some of the benefits here resonated well with you and you'd be interested in learning more about what we can do to offload some of that off of your shoulders. For those who are looking at starting a 401k for your organization, this is a great way to do it, just because you won't be burdened with some of the things that may prohibit you from doing so in the past, such as the administrative burden, such as the fiduciary risk aspect of it. The IFAI plan is a great way for you to offer a 401k to your employees. Now, one other thing to keep in mind, and I don't know how this is going to play out in the states where you are located, but state mandated retirement plans are becoming a way of the future. For example, I live in the state of Illinois. And the state of Illinois this year has mandated that any organization with 25 or more employees that don't offer a retirement plan and have been in business for 2 years or later is going to have to offer some form of a retirement plan by November of 2019. And if not, there's going to be financial penalties assessed to the organizations that don't comply. I believe there are about 10 states across the country that are mandating state retirement plans with different specifics and different guidelines or requirements to who must comply with that. I will tell you most of the states are looking at an auto enrollment type of plan with a Roth type contribution. So your employees would potentially be auto enrolled at a specific deferral percentage amount, of which now their monies would be going in on a post-tax basis as a result of these states typically needing more revenue from that standpoint. But that's something to keep in mind as well as you evaluate your options, that potentially in the future, you may not have a choice based upon if your state would offer a state mandated plan and the requirements that they put in place to meet the eligibility to have to offer that retirement plan itself. Haley, let's go ahead and open it up to any questions, please.
Yes, thank you, Jason. We have one question coming so far. Someone said, no actual cost was discussed. Is there a brochure or PDF that shows the actual costs?
Yes, we can get over a brochure that shows the actual cost to the plan itself.
Okay, great. I'll just wait another minute and see if we get any more questions. Oh, someone said, is there a minimum number of employees?
There is not a minimum number of employees that must join the plan. Of course, the Department of Labor and the IRS involved in 401ks. So what we'd want to make sure we understand is sort of what the overall objective of offering the 401k plan is, and then we could work with you on building a plan that's going to best suit your organizational needs. And the reason I bring that up is because there's annual discrimination testing that all 401ks plan undergo on an annual basis, and potentially sometimes business owners and certain classification of employees may be limited on how much they're able to contribute as a result. So we'd review the testing with you and share with you what type of options you have so that you can take full benefit of the 401k and be able to maximize your contribution levels.
Great. Someone said, is there a specific time frame in which we would have to decide to sign up?
Great question. So there is no specific time frame in when you would have to decide to sign up. 401k plans start throughout the calendar year. Those organizations that currently have a plan, plans move throughout the calendar year as well. I would mention that if you are looking at starting a plan and you would want to utilize what's called a safe harbor employer 401k, that plan must be in place by October 1st to qualify as a safe harbor for that calendar year. Otherwise, that's really the only requirement from that component. For those of you that currently have a 401k in place and are looking at joining the IFA plan, keep in mind that if you want to avoid, I guess what you would say, filing a 5500 for calendar year 2020 or potentially doing an audit for 2020, you would want to join the IFA plan here in 2019 and give plenty of time for those assets to transfer over in calendar year 2019. So by hopefully by December 31st, there are no assets in your single employer plan. So you could file a final 5500, and then moving forward, you would be encompassed under the IFAI 5500 moving forward from that standpoint starting in 2020. But that's something that we could discuss with you offline during another conversation.
Great. Another question is, if you have common ownership in two companies, will you need to offer both companies by law?
The IRS, so if you have what's called a control group based upon the ownership percentage of the entities, the IRS sort of frowns upon if you offer the 401k to one entity and not the other. That's something that we would want to get the third-party administrator involved in, because there's some what you would call additional testing called coverage testing that would come into play. And you'd want to make sure that you could pass the coverage tests if you were to basically offer the plan to one entity and not the other entity. But that's something what we could further the conversation with you and the third party administrator to make sure that you would not have any ramifications if you were to do so.
Great. Another question is, are owners excluded from participating in their company plan?
No, owners are not excluded from participating in their plan.
Awesome.
There's a lot of times that owners will set up the plan knowing that they're not going to participate. They just want to make it available as a employee benefit and to utilize as a recruitment type of benefit as well.
Great.
And just keep in mind, from an employee perspective, any employee under the age of 50 can contribute up to $19,000 on a pre-tax, post-tax, or combination of both basis. Any employee over the age of 50 can contribute $25,000 into the plan as well.
Okay. Another question is, do you have to have a majority of employees participate in the plan? Can some opt out?
Yes, it's really an employee elective. So the employee is going to determine if he or she would like to participate in the plan, and then traditionally at what levels they'd like to participate at, meaning how much of their compensation they would like to defer into the plan. But traditionally, that is an employee elective if you don't utilize what's called auto enrollment, where you auto enroll all the employees into the plan, and then they have to go in and unenroll themselves.
Okay. And how long does it take to transfer from single plan to the IFAI plan?
Great question. So if we have what's called a takeover plan where you currently have a single employer plan in place, we need about an 8-week lead time here at Transamerica to get the plan up and established to start accepting contributions. But really, your assets are going to come over probably in that 12 to 16-week time frame from when we get the documents. And the reason being is because all 401k providers have what's called a minimum notification period that must lapse before they'll entertain transferring the assets over. Some providers are 30 days, some are 45, some are 60 to 70 days. So what we can do is we would go ahead and get the plan established to start accepting payroll contributions, and then the assets would just come over at a later date dictated by your prior organization. Now, one thing to keep in mind is we do have a team of what we call transition managers here at Transamerica. So what happens is they would be sort of that key ingredient to the implementation of your plan, whether you currently have a plan in place or not. They would have a weekly phone call with you, detailing what's taking on during the implementation of your plan, what things are taking place in the future, what has taken place. For those of you that currently have a 401k in place, they would work with your prior provider regarding the asset transfer from that standpoint. So they would partner with you and your prior provider to ensure that the asset transfer takes place, and then it would work with our team here at Transamerica to reconcile those assets once we receive those files.
Great. I don't think we have any more questions.
Okay. One other thing too is Haley's going to be following up with or sending out a follow-up email. In that follow-up email, she is going to put the contact information for my colleague, Zach Allen, that you can reach out to and feel free to ask any additional questions of. And Zach will be supporting you as you evaluate the retirement plan itself, seeing if this would be a good fit for you as an organization from that standpoint. For those of you that currently have a retirement plan in place, one thing we can also do is offer what's called a fee analysis, so you can sort of benchmark the fees of your existing plan, looking at the IFAI multiple employer plan, just to see how the fees would look under that plan as well as part of your benchmarking process.
All right. Thank you so much, Jason, for this presentation. And if anyone has any questions about the IFAI Textile Industry Retirement Plan, please feel free to contact me at any time, and I'll connect you with Zach from Transamerica. Thanks again to Jason, and thank you all for attending.